Good afternoon and welcome this afternoon to Market Movers, another great webcast from Schwab Coaching. My name is Ben Watson. I'm an education coach and senior manager here, and I am joined out there in the chat by my good friend Brent Morse. There is the closing bell, and that means it's time for Market Movers, but not for long, because starting next week, we're going to change the time of this particular webcast. It's going to be an hour earlier ahead of the market so that we can take a look at what's going on towards as we get into the close. Still 30 minutes, still a short way to end your day, but it is a great way to get that last little bit of time in the market as we close things out for the week. As it is, today is the last webcast for this week. We're grateful that you are here with us as our audience. Whether you're watching this in the live version or the recorded version, we appreciate you being here. And again, Brent Morse is going to be out there helping out in the chat. He's a 20-plus-year veteran of the financial markets. Thanks to all of you for being here. A couple of quick housekeeping items as we get started today. Remember that everything we talk about is simply for illustrative and educational purposes only. It is not a recommendation. It is not in any way advice. Remember that we're going to be using the Thinkorswim desktop software platform today, specifically the paper money version of that platform, which is a great learning environment. However, it is not a guarantee of future success out there in the real world. Lots of different ways to look at the market. We're going to talk about some of them today. We're going to talk about kind of that macro environment. We're also going to talk a little bit about technical analysis. And those are all theoretical in nature. None of those are guaranteed. Schwab doesn't recommend to use technical analysis as a sole means of investment research. And of course, that investing involves risk, including the loss of principal and past performance, no guarantee of future results. So let's do this. Let's jump on out into the platform here really quickly and take a look at what's going on in the market. Now, as I say that, I'm also going to remind you to click on that subscribe button down there at the bottom of the page. That's going to help to make it easily accessible to get to these recordings and all of the other information that's there on the Trader Talks webcast channel. It's at no cost to you. I'm also going to ask you, if you happen to like today's webcast, go ahead and click on that like button. And that's going to help to bring this content to other people as well. By the way, Brent has already taken care of this up in the chat. He's pinned it up to the top of the chat. You can follow me. You can follow Brent Morse. You can follow all of the education coaches here at Schwab Coaching on X, at Ben Watson CS, at Brent Morse CS, and that naming convention will continue throughout all of those other coaches that you see here on Schwab Coaching. And we'd love to have you follow us over there. We have a good time and some great conversations over there. So let's do this. I want to really quickly take a look at what's going on, because we had a bit of a rally today that ended a little bit higher, about 1% higher, but it faded somewhat towards the end of the day, which isn't necessarily such a bad thing in the context of all that has gone on. We've had some data points, obviously non-farm payrolls today. Next week, we're getting into kind of the middle week of June. We're going to have more data. We're kind of out of the earnings season, although we do have some late retailers announcing earnings. And so it's kind of that doldrums. And we'll see where that doldrums kind of comes into play, that perspective. There's that old adage in the market, sell in May and go away. And at least from a volatility perspective, that seems to be perhaps what's happening here, is that there is a little bit less volatility overall. And we'll see what that plays out to be in terms of the possibility of potential movement. There's always the possibility of movement. News happens, and it happens without fanfare or without warning oftentimes. It happens despite our best efforts to get ahead of news. News just happens. That's the scenario, right? And it can change the market. So let's take a look at what's going on in the S&P 500 today. I'm going to zoom in a little bit here. We saw this move higher. It was marginally higher than this resistance. We kind of saw this deliberation candle pair yesterday and the day before, right? So market moved a little bit higher off of the week, and then off of the weekend and into the early part of the week. Then we got these two deliberation candles yesterday and the day before. Today we got non-farm payroll news, which was a little bit stronger than expected. and we see that move a little bit higher here, and we see the RSI ticking up. There's a little bit of profit taking, it seems, certainly in this particular case. If we were to shorten our time frame down to a 5-day, 5-minute chart for today's move, we can see that the majority of that move happened kind of at the outset on that non-farm payroll information, and then it really kind of sat there throughout the day. So this was really kind of a overall not much movement day, right? And kind of starting to see this little bit of a pullback. Not necessarily pullback, maybe just a bleeding off, and not really abject profit taking other than early in the day here in the S&P 500. Let's take a look at the NASDAQ, because the NASDAQ, where we saw still some technology changes, we see some technology advances. We're kind of ahead of certain events in this space, like the Apple Developers Conference. We see Microsoft moving to new highs. We'll take a look at some of those individual names here in a little bit, but the technology space, this is where perception is not necessarily reality, because this seemed to be a bit stronger than it was today in this particular case. Now, granted, the NASDAQ isn't all technology. There are some financials, a little bit of financials in here, not much, not a lot of industrials, but it's primarily driven by technology, especially the NDX, which is the NASDAQ 100. And so that's kind of giving us that little bit of a doji, much like we saw yesterday and the day before in the S&P 500. So maybe just kind of rotating around now to the NASDAQ, but a little bit stronger on the RSI. Small caps are where there was perhaps a little bit stronger movement. And I had already drawn this line in. So early in the week, I teach earlier in the week, I teach two webcasts. One, Tuesday mornings, I teach the Trading Futures webcast. And two, on Wednesdays, I teach the Trading Index Options webcast. In both of those webcasts, we talked about the idea that maybe the Russell 2000, the small caps, given this doldrum, given the uncertainty, but given kind of the acceptance and digestion of the uncertainty, was maybe neutral for the small caps. Then all of a sudden, and this is a great illustration of the idea that news happens, we get this non-farm payroll report, services advancing and so forth, and we start to see that benefiting the Russell 2000. In addition, we see rates coming in a little bit and starting to move, and that is beneficial for the Russell 2000. So some strong movement in the Russell 2000 today. As a matter of fact, if we were to do this, let me zoom back out. I'm going to zoom back out on this index, and you can see the substantial nature of that movement, RSI moving stronger here. But as we do oftentimes, I'm going to put a comparison chart on here, COMP comparison, and I'm going to put a comparison line on here, and I'm going to make that comparison line /10Y. Now, this is a futures contract, and this is a futures symbol. We're not talking about this as a tradable instrument in this particular case. I do that on Tuesday mornings. We're talking about it as a measure of the market here in terms of the 10-year yield in comparison to what the Russell 2000 is doing. So I'm going to click on apply and OK. And what's really interesting is the fact that this correlation, we saw interest rates moving just a little bit higher here over the course of the day, although they were moving a little bit lower. So this may be a little bit of a lagging effect here. The fact that we got interest rates ticking a little bit higher is generally kind of out of lockstep with the Russell 2000. So will that bear a little bit harder on this, right? To the downside? That remains to be seen. So this is kind of an interesting correlation with what's going on with the or lack thereof with what's going on. Well, okay, wait a second. Let's step back, because it is correlated at this particular point, right? Yields up, the small caps up, which doesn't oftentimes happen. Oftentimes these two move in opposition to one another. So that's kind of an interesting perspective, and that may be part of this little bit of a lag/disconnect. All right, great. So that's kind of what the broad market is doing in this particular case. So let's look at a couple of other scenarios here. I want to pop over here to our VIX grid, the volatility grid. And I want to take a look at what's going on in volatility. And I'm going to zoom over here onto this right-hand side. So this average that I have on here is a 30-period average of volatility. And volatility in and of itself, the VIX in and of itself is a 30-period average of a cross-section of in the money, at the money, out of the money options. Now, there's some argument about when the VIX gets low and kind of grinds, is it the best indication of market volatility? You might look at, shorter term perspectives on the VIX. But generally, this is the one that's accepted and looked at in the market. And we can see, once again, it is grinding in a couple of different ways. It's grinding below this diagonal trend line that I've drawn in here, number one. And number two, you can see that the overall 30-period average of the VIX, which is a 30-period average, it's in and of itself, right? So this kind of like a double slowed VIX is what that line is. That's moving lower as well. And we're still well below that level. So volatility is low and getting lower. What that suggests, again, that goes back to that idea of the doldrums and the market kind of taking this slower summer perspective, right? Now, there's an old adage that says, never sell a dull market, right? And I don't know if that's true. I mean, that's a heuristic that a lot of people adhere to, perhaps, that slow markets or dull markets, markets that are less than volatile, tend to grind higher. That's kind of what that adage says, is don't sell a market that is slow because it can grind higher, and selling it at that point maybe misses out on that upward opportunity. And I think that's kind of what we have going on here, is this market that is not exploding higher, neither is it exploding lower. It's simply grinding. And this is indicative of that grind. But let's take a look at some of those other aspects of the VIX. You can see the opposite correlation here. We're almost exactly at that -1 correlation on the VIX versus the SPX. And if we take a look at the pricing of VIX versus the level of volatility, we can see that VIX is continuing to fall, as is the VVIX. Now, the VVIX is still a little bit elevated relative to the VIX. Now, remember, VVIX, as we've talked about it before, is the volatility of volatility. Another way to read that is the willingness for market participants to pay up for protection. So here's where, however, the specter of low volatility comes into play. If institutions, which are by and large the ones that are driving the VIX, are not willing to pay up for volatility-based products here at this point to hedge positions, then if there is a news story, then that volatility can spike, may spike, likely will spike, no guarantees of it, however, quickly, because there's panic, because institutional investors by and large are procrastinators and parsimonious when it comes to buying hedging activities or hedging products prior to. They don't buy umbrellas when it's sunny most of the time. They wait till it's starting to rain. And sometimes they're willing to pay more for it, right? So that being the case, that's one of the reasons why maybe we're seeing this VIX grinding lower, but there is that possibility of upside movement. So I want to always keep that kind of in the back of our head in this particular perspective. So Kay asked the question, I think Brent's okay, but usually I host this, but the fortunate thing is Brent is there to help me out when I'm on the road, which I will be next Friday, by the way. So I will be in Miami. Some of you will be with us in the Miami area. We're going to be doing a market drive event on Friday, the 13th. That market drive event is a one-day event. Let me pop over here really quickly, and we'll take a look at that. Let's go to Schwab Coaching. We're at schwab.com/coaching. I'm going to go to in-person events. And if you are in the Miami area, Aventura specifically, we'd love to have you come and join us at the Market Drive event. It's at the JW Marriott Turnberry in Aventura, right across from the mall. Beautiful property. It is a one-day event. We start at 9 in the morning. We've got some great speakers in this particular event. Joe Mazzola, who's the head derivatives and trading strategist here at Charles Schwab, is going to be the MC. I'm going to be hosting. We've got some great presenters and great speakers from third-party sponsors, as well as others. We've got Jessica Inskip. You've seen Jessica on the Schwab Network. Schwab Network brought to us by our media affiliate, Charles Schwab Media Productions. You've got Kevin Hinks, Tom White, myself, Kevin Green also in that event throughout the day, along with Joe Mazzola. So it's going to be a phenomenal event. And we would love to have you there with us. Come and join us for that event. Then in a couple of weeks, we're going to be doing the same thing in New York City. So if you miss us in Miami, come and find us in New York. And let me bring that one up here really quick. Here's our New York event. It's going to be at the Marriott Marquis right in Times Square. Phenomenal property. It's a great place to be. Barb Armstrong's going to be there. Kevin Horner is going to be there with me. Again, great lineup of presenters. Nicole Petalides is going to be at that event as well from the Schwab Network. So come and join us for these events if you can. And those are some great opportunities. Really quick, while I'm right here, I want to show you this. I'm going to go to the live webcasts and virtual workshops calendar, which is in schwab.com/coaching. And if you come down here to next Friday, you're going to see, it says me, but it's not going to be me because I'll be in Miami. But you'll notice the time change. We're moving from 4 p.m. Eastern time to 3 p.m. Eastern time. And that Market Movers webcast, 30 minutes still, but it moves up by an hour. That gives us a little bit more time throughout the day. By the way, this is where you can also find all of our great archives here at Trader Talk's webcast page. And if you want to learn something specific, click on that little search icon, search through there. Literally dozens and dozens and dozens of webcasts that are recorded that you can go back and you can learn from. So some great resources. And I just wanted to show those to you here really quickly. All right, let's do this. Let's pop over to our sector grid. And I just want to take a look at what is going on in kind of that sector level view. Now, we've looked at this before. I've got to move these labels around a little bit, but we can kind of get to a sense of what they are. Energy generally moving lower, and we've seen energy, specifically natural gas. We've seen heating oil move a little bit lower. We've seen RBOB gasoline move a little bit lower since Memorial Day. Crude oil moving a little bit sideways here, and that's been dragging on kind of the energy sector as a whole. So energy still, remember, this is the 50-period simple moving average, that blue line there. Energy still kind of going sideways. Intermediate term kind of moving a little bit lower in the short term there. Materials starting to take that turn higher, and we're starting to see that move a little bit higher. That is a function of lower energy prices, lower crude oil prices, lower copper prices to a certain extent in terms of the metals and so forth, right? So that's been driving this move a little bit higher. Industrials, though, and this is where this look over the last few weeks, I think, has been beneficial. Industrials have been one of the stronger sectors, and in fact, breaking out a little bit today. We'll take a look at that here a little more strongly, a little more closely in just a moment. Consumer discretionary weakening a bit, although it was enough to turn this higher. The consumer staples have also been seeing a rotation back into some of those consumer staples, even though we've seen some of the companies within the consumer staples space changing their guidance, doing a little bit of some layoff activity in terms of some of those big consumer staples companies, but that may be indicative of a return to some profitability. And one of the reasons why we're seeing a rotation into some of these staples. Healthcare continuing to move to the downside other than in the short term. Financials, as we'll start to get back into, we're not that far away, guys, from our next earnings season, where financials will lead the way with their earnings announcements. And that's going to be, I think, a much stronger read, because remember, this last earnings announcement was really pre-tariff. These financials are going to be now kind of the first out of the gate, kind of to break the ice from a full quarter living with the tariff announcements and the potential impacts. And so that's going to be, I think, one of the bellwethers in paying attention to the financial space. Information technology has been in a rotational move higher, as has communication services. We started to see those both hooking higher. Utilities, kind of mimicking what we've been seeing with the small caps. Real estate, mortgage applications are down. That has been a challenging space. So let's pop over here to industrials for just a second, because this is where that strength has been. And I'm going to go ahead and maximize this sell. And in fact, you can see that breakout today in terms of the industrial sector. So now what I want to do and kind of seeing where that is I want to go to the Market Watch tab. So Zinc, maybe this will get to that answer here. I'm going to go to the Market Watch tab, and I'm going to go to the Visualize sub tab. So Market Watch and then Visualize. And now I'm on the S&P 500. And so I can see broadly what's going on with the S&P 500 today, right? And I can see where there is strength within those sectors: communication services, information technology, consumer discretionary, financials a little bit, industrials maybe lagging just a bit, but not quite as much over the longer term. So some pops in the individual names, but let's take a look at the industrial sector. Now here's the strength in the industrial sector and where we're seeing some of that strength in the industrial sector. Delta Airlines, United Airlines, seeing definitely some strength. John Deere, Caterpillar, some of the railroads, Union Pacific, CSX, Uber seeing some strength here today. General Electric, or GE Aerospace, and that goes along with the airline space. But what we didn't necessarily, and probably not likely to expect in this particular case, is some of the strength kind of in some of these other areas. Ingersoll Rand as a component supplier, IDEX as a component supplier and a machinery supplier, right? So some of these areas, and then even in the business services space, FedEx and UPS, up almost 2% today in today's move, right? So, David, yeah, I think arguably you could maybe argue that given what we're kind of seeing, that expectation of re-onshoring of manufacturing, that there is some impact to this space in terms of that expansion, right? Because if companies are having to expand their capital expenditures, their CapEx, on new tooling and new manufacturing onshore, this is where it's going to come home to roost, and this is kind of where we're seeing it. And you're starting to see, I think, the strength you're seeing in the railroads is coming as a function of that move kind of from the pre-tariff pull-through of shipping and ordering. That may change, but this one is the really interesting thing. Delta and United up almost 4.5%, either one in today's trading. And that's kind of got me intrigued about this space, because there were a lot of people that were suggesting the demise of the airlines in the context of travel. Now, part of this is an interesting perspective, right? So I'm going to come back over here to my single grid, and we're going to bring up a couple of these names in that single grid. So we'll bring up Delta Airlines, and you can see that move today. This is one of those things where when the airlines reduce capacity, which they have been doing in terms of laying off not workers, but laying off deliveries of new aircraft, that's a reduction in capacity. Their revenue increases because their aircraft are fuller and they're flying less fuel, right? So decreased capacity in this particular case in Delta and United is leading to some stronger performance in the last couple of days, right? So starting to see some of those moves. I don't want to belabor that too much here, but I wanted to kind of get into that from that perspective. Now, what I've done is I've put together, I'm going to go to my monitor tab, some of the names here in this space that have been moving today. Delta Airlines, like I said, Tesla on the other side of that coin, right? Tesla ahead of the robo-taxi event next week, seeing that move a little bit lower, breaking that support level, although a little bit of a dead cat bounce perhaps today on Tesla. Some of the other names that are moving, Starbucks, SBUX. Starbucks moving a little bit higher, in fact, in breaking out of a resistance level today and out of this basing pattern, and doing it with a little bit lower volatility. But that's a nice little gap up to the upside here in this particular case. Not a recommendation, simply an illustrative and educational example. And I wanted to talk about Apple ahead of next week's WWDC, the developer conference, and starting to perhaps break a little bit out of this symmetrical triangle. That being said, it's respecting that diagonal downtrend line at the moment. RSI falling off a little bit. Maybe we see this stay a bit neutral into next week in terms of the technology space. And let's come back over here and let's take a look at a couple of the others. NVIDIA, one that a lot of traders paying attention to. So let's take a look at NVIDIA. And NVIDIA moving up to some previous highs here. And again, once, twice running into a resistance level and perhaps backing down from that resistance. A little bit overextended perhaps, and maybe seeing a little bit of investor profit taking up in this area with that possibility of a bit of a move back down to the downside. So some other movers in this space, though, Disney, which is interesting. We were just there last week. Some of you were with us at the Anaheim Advanced Options Workshop, and making a little bit of a move outside of a resistance level, a little bit stronger move than we've seen post earnings. So we saw that big gap up and a continuing gap up to the upside and some additional strength, although running into perhaps some previous levels of resistance up around this 114 mark or so. All right. So now, and Scott, thank you for that news. That would mean that we probably would take a look at JOBY, which is Joby Aviation, and we are after the market close. So they are up 7% today on this move. If we were to take a look at a 5-day, 5-minute chart here, and in the after hours, starting to see that move a little bit higher here. So they closed at 812, notching 8.5 on that news late in the day after market close. And yeah, that's right, ACHR, the other one in this space, Archer Aviation, another one making that big move to the upside. So some spaces there in terms of market movers. So Scott, great comments. I think that goes right along with this perspective of what this webcast is designed to do, which is to take a look at those stocks that are moving markets here. Archer Aviation kind of coming off of that level of support. So maybe, again, some of the reason why we're seeing some of those small caps moving a little bit higher here. Now, I wanted to leave you with this because I already spent some time taking a look at those calendars and schedules for what's coming up as far as events and where you can find more information. But I want to go to the Market Watch tab. I wanted to go to the calendar for next week, and I wanted to see what we've got in the list. So we're going to see mortgage applications. We're going to see the petroleum status report. We're going to see a Baker Hughes rig count. We're going to see the Fed balance sheet information. Still a few earnings announcements left. We've got GDP numbers. We've got PPI numbers coming next week. So there are still a few economic indicators yet to be had in this mix ahead of the Fed meeting, which is, I believe, on the 17th is when that begins. So if we look over the horizon a little bit on the 17th, that's where we're going to have that Federal Reserve meeting and probably the news conference on the 18th. So there may be a little bit of wait and see again until that we get that news from the Fed on June 18th. Now, I know that there are a lot of national holidays out there. We've got one coming up in a couple of weeks. We've got Juneteenth coming up, but I don't know if there is a more enjoyable national holiday than this one that we're celebrating today, and that is National Donut Day. By the way, make sure that you follow if you want to share some donuts, some virtual donuts with us. Follow us on X at Ben Watson CS, at Brent Moore CS. But I put together a quick grid for you of donut companies. This is in celebration of National Donut Day. And other than Tim Hortons, which is QSR, which has a lot of other brands involved in it, none of these are really doing very well, at least at the moment. But Krispy Kreme's still hanging in there around the $3 mark. Tim Hortons, which is QSR, which is Restaurant Brands International, which also owns a number of other names, seeing a little bit of a long-legged doji candle today. Tasty Cake, which is Flower Foods, For those of you who are on the East Coast, you know your Tasty Cakes, a little bit of a gap up and a bit of a long-legged equilibrium candle there. And then Urban Legend, which is Mondelez. Urban Legend, just a recent acquisition of Mondelez. Not seeing some very much donut love today. So go out and celebrate if you have not already done so. Celebrate National Donut Day. There's some ideas for doing that where you can go and get your donut. But my thanks to Brent Morris for helping out. My thanks to Andrew and Gabe and everybody else that helps to make these webcasts possible for you. And thanks to all of you for being here. Remember, early by an hour next week, starting 1 hour earlier. We will see you then. Take care, everybody. Have a great weekend. We'll see you soon. Bye-bye.